After years in waiting, the SEC finally approved 9 spot Ethereum ETFs for trading. This video covers all you need to know on how to choose the best Ethereum ETF. Spot Ethereum ETFs are funds that hold Ether. Ether is the cryptocurrency that supports the Ethereum blockchain network. Ether is the second largest cryptocurrency with a market capitalization of $411 billion. Similar to Bitcoin ETFs, Ethereum ETFs are grantor trusts. This means that investors will own a share of the Ether held by the Ethereum ETFs. While all 9 Ethereum ETFs hold the same asset, namely Ether, not all of them are created equal. The first point of comparison is expense ratios. If you are a buy and hold investor, focusing on fees is crucial. Here's a table that summarizes the expense ratios for 9 Ethereum ETFs. I show these expense ratios before and after waivers in parentheses. These funds are still building momentum. For this reason, they provide temporary fee waivers for investors to buy in. The fee waivers come with limitations. These include a certain period of time or until a fund reaches a certain asset threshold. For instance, Franklin Fund commands 0.19% expense ratio. This ratio is waived until January 31st, 2025, or until the fund reaches $10 billion in assets, whichever comes first. The Grayscale Ethereum Mini Trust has the lowest expense ratio of 0.15%. We see that Grayscale offers 2 funds, with Mini being one of them. Actually, their main Ether fund used to hold Ether futures before July 23rd. After that, Grayscale converted its Ether futures fund to hold Ether directly. They still continue charging the highest expense ratio of 2.5% though. Grayscale learned from its mistake with a spot Bitcoin ETF. The sponsor created a separate mini fund to attract retail investors or make them stay. Hence, they spun out 10% of Ether from their main Grayscale fund and created this mini fund. The Grayscale main fund aside, other ETFs charge expense ratios within the 0.05% deviation. Liquidity is another consideration for investors. It is especially important for those who trade often. By liquidity, I mean how fast you can trade ETF shares without a material impact on a price. You want to buy a spot Ether ETF with a relatively large trading volume and a low bid-ask spread. One metric to focus on is bid-ask spread percent. You calculate it as the dollar spread, which is ask minus bid, divided by the average of bid and ask. The lower the spread percent is, the better price you will get. Most ETFs must disclose a 30-day median bid-ask spread percent on their websites. Of course, only a few trading days passed by since spot Ether ETFs got approved. I compiled this metric where available. We see that it's under 0.08%, but it could be lower. For instance, the current bid-ask spread percent for iShares is 0.04%, which is quite tight. Another metric that can signal a high liquidity is a trading volume and a dollar volume. The dollar volume is a product of a share price and a trading volume. Ideally, we should use average for the past several months. Unsurprisingly, iShares and Fidelity lead with the highest dollar volume so far. Grayscale and Bitwise are not too far behind. Also, you can evaluate Ether ETFs by their net asset sizes. The bigger the size is, the more likelihood that the funds will stick around. Unfortunately, it's too early to assess this metric. While I compiled net asset positions for each ETF, these numbers are changing. Grayscale main fund is the largest, but it consists of legacy capital that will likely leave the fund. If we look at Bitcoin ETFs for guidance, iShares and Fidelity will likely lead the pack going forward. Another factor for choosing the best spot Ether ETF is the trading cost that a fund incurs. You may know that a typical ETF creates shares through in-kind transactions. This means that an ETF itself is not responsible for trading expenses and trading assets. Another intermediary, usually a broker-dealer, assembles underlying securities, Ether in our case, on behalf of an ETF. Later, this broker-dealer exchanges these securities for ETF shares. Things are different with spot Ether ETFs. The funds are responsible for posting cash and trading Ether when ETF shares are created or redeemed. This leaves the fund and its investors responsible for any trading costs. Thus, skill and size of a fund manager becomes very important. Most of the Ethereum funds are under the management of large or experienced financial institutions, so this is unlikely to be a concern. Another consideration could be giving back to the community. Certain funds committed to donating part of their profits to the crypto community. For instance, VanEck will donate 10% of its Ethereum fund profits to Protocol Guild. Likewise, Bitwise will donate 10% of its profits to Protocol Guild and PBS Foundation. If this is one of your preferences, Bitwise or VanEck can be a choice. As a final point worth mentioning is Ether staking. You may know that the SEC denied Ethereum ETFs to engage in staking. Staking essentially allows Ether holders to commit their crypto to update the blockchain ledger. In return for staking, investors receive rewards that could range from 2 to 4% per year. This is an extra income that Ether ETFs won't see. So if you're willing to engage in staking, you may have a performance edge over Ether ETFs. So where does all this leave us? What is the best Ethereum ETF? Based on expense ratios, size, and liquidity, actually many of them provide a reasonable choice. But Grayscale mini fund stands out with the lowest fee of them all. So if expense ratio is key for you, Grayscale Mini is the way to go. But it's likely that iShares and Fidelity funds will catch up too. Although they charge higher fees, BlackRock and Fidelity stand behind them. I can see how they can grow to large sizes using their established customer bases. This alone will ensure their liquidity and popularity. Conversely, we have VanEck and Bitwise. They're committed to giving back to the community, and this could be an important differentiating factor for someone too. That is it for this video, guys. I hope you learned something new today. And if you did, please give this video a like and subscribe to my channel for more content on investing. Thank you for watching.